Good afternoon, everyone. BC Richfield here, coming to you live from London. It is spot on 4 p.m. UTC or 1600. How is everybody doing today? Got some nice people on the stream. I know we're a lot later today, guys, than we intended to before, but they're doing a lot of works around our area at the moment, so decided to avoid the worst of the drilling noises that are going out on the street to try and bring this a little bit more clarity. So I know it might be a little bit later for some of the regular crowd, but a big welcome to anybody that is tuning in, and a big welcome to anybody new that's tuning in maybe for the first time. So if you've got any questions, guys, please do pop them in the comments section and we'll get round to them. We're going to start with Bitcoin, and then, like normal, we're going to dedicate this section today to requests. So that can be anything from FX, obviously crypto, altcoins, bits and pieces like that. So have a think if there's anything you really want us to look through, and just remind me as we get to the end. If there's kind of like a general consensus for more rather than others, then we'll favour those. And if we're a bit thin on the ground today, then we'll just do our best to get through as many as we can. Craig Parker, CS Lightshy, hello guys. Really good to have you on the stream along with everyone else. So let me stop waffling on and let's get straight into the charts. So I just wanted to start with this today on a daily. Probably most of the questions I get are about ranges, right? So I thought it'd be a good idea today to kind of close these off with you guys. Well, not close them off, but just discuss to you how I get them. A lot of people say they struggle to find the right points for ranges, and they feel like they're not kind of getting the right reactions at the levels that come into. Obviously, I'm not going to spend today going over the real kind of core concepts and that, guys. If you've got questions, please do ask. And it might be that I've got a video I direct you to, or I'll cover it very quickly. But the real simple premise of trading ranges for me is, once we've got our range in place, this dotted line along the middle is our EQ, which stands for equilibrium, basically just saying that's our midline. If we run the lows of a range, if we deviate like we've done here, yeah, and then price comes back within the range, we target the opposite side of the range, but via the EQ, right? Meaning that we expect some kind of interaction here around the equilibrium, right? Now, obviously, we wait for this range to be set and it plays out. But you can see historically as well how this level has been respected, right? Found resistance here, broke above it here, failed the retest, came back down below, came up, held for a short while. But as soon as we lost this level, we had an immediate sell-off. Then this retest here that led to a big sell down to the lows. Now we've come in here, we've got our deviation below the range lows, all right? Now, whenever we see these points of consolidation, it's price compressing, yeah? So when price is compressing like this, yeah, then what we want to do is we're looking for a breakout, yeah? So this is like a pseudo compression range within a larger range, or just outside of it. C-Ron, hey buddy, good to see you on the stream. Blockchain economy, yes, absolutely, I will be there, as will Burb and a lot of the team as well. So it'd be fantastic to see some of you guys if you come along as well. Craig Parker as well. Once we had an event like yesterday, how long do you normally wait or expect a range to form? Really good question. So there's two kind of ways that we would look to set a range, right? And the key thing for me is, when we're looking to set a range, then what we want to do is we're either going to take an inside bar, which is a pattern there. See, Ron, fantastic. Really good to see you down there, buddy. Yeah, definitely keep my details open on Twitter and hit me a message, and we'll arrange meeting up for sure. So I'm just going to get rid of that, guys. You can see the deviation here. But on a weekly scale, this is our inside bar pattern. That means that we've got, this is our mother bar, this is our inside bar candle. And price has kind of just been trapped within this range. Yeah. So that's what I'm looking at in terms of my weekly range that has been set by the mother bar. All right. Now, the other way that we've set a range, and like Craig's alluding to here, is seeing what I would call an impulse range. Okay. So let me show you what that would look like. And we'll stick with the same time frame, right? So that we're not cherry picking anything. But for me, an impulse range is something like this. Let's just take this down move here, for example, right? You have the big sell-off here, price comes up, continues to sell off. When you then have that impulse move in the opposite direction, right, what we want to do, let me do this just with a range tool here. We want to take the low, so this is the low that was set, and then we want to take it up to the clean high, the opposite would be true if we were looking at this from the perspective, obviously, if we had a move up like this, yeah. So just to put this, get rid of that just for a second. But to put this move in perspective, where we see a large impulse move up like this, yeah, we would want to be looking to take the high and then finding the clean low, which would be this low here currently. All right. And then what we're saying is price is currently in the midline of this. If we saw deviations here or of the low, and then it stepped back in the range, then we would look to be pushing higher. All right. So same kind of principles. Greetings from Hungary. Absolutely welcome. For anybody that knows this stream knows how horrific I am at pronunciation. So I'm really sorry. Kasaba Benyi, maybe. I'm sure I've murdered that, but absolutely welcome, welcome, welcome. Mr. Brownbug, here we go. US retail sales month to month from -1% to 3%. And then our core retail sales, well, they're 0.9 to 2.3. Okay, yeah, really, really interesting. So the market didn't really seem to be that bothered. And another guy, for another person from Hungary as well. Fantastic. Great to have you guys in with us. Welcome. Bernd as well. Good long-term friend of the stream, Bernd. Very much welcome, and welcome to everyone. So, yeah, obviously big news event yesterday. We've got CPI. Now, it was interesting, right? Because the number was technically worse than expected. But I think at the moment there's a lot more drive behind that. Although I must admit, I was very cautious yesterday when that came out, and obviously the labour market's still a little bit too buoyant, for want of a better word, as well. So, yeah, it's crazy. Yeah, you raised a really, really good point as well. And from Turkey as well, Crypto 101. Welcome, welcome, welcome. And we're saying everything to the moon, all numbers say down. Yeah, I mean, we got to remember, right, that the risk markets, or the markets in general, have been fighting the Fed so far. Risk markets are pricing in rate cuts probably towards Q4, I would think. I mean, I'm not one to argue with the markets, right? But it seems a little bit ambitious to me that we get cuts now. I think Powell kind of turned everything a bit dovish when in the last presser he kind of said that they might look to pause the hiking in a couple of hikes time, which the market really kind of threw a lot of fuel on the fire. And I think they expected the equity markets to just calm down a little bit, and instead we just got this massive pop. But then they put the number of revisions out, right, and that started to calm things again. But this market just does not want to settle down at the moment. So, at the end, look, there's a couple of things with this. Yes, we want to take the news. I don't know. I just got a message. Is it me or have we lost you? Guys, can you hear me again now? Let me know if you can hear me, guys. Might have just had a little technical wobble. Is that? Hang on, let me just check. How are we doing, guys? Have we got visuals? Have we got sound? I don't know. Loud and clear. All right, mate. Hopefully there's nothing too bad with your feed there, Craigie boy. Hopefully that's all right, mate. And yeah, this is a fantastic point. Everybody, this really puts everything in perspective. Huge thoughts and prayers with everybody in Turkey and Syria who have been affected by this horrific earthquake. I've got some friends in the industry that are from that part of the world as well, and it's moments like these, right, that puts everything in sharp focus. Take that extra moment to call your parents tonight or your loved ones and put your arm around people that you care about and tell them that you love them, because you just don't know in this world, especially today with all the terrible things that are happening. So really, really good point there, Crypto 101, and thank you very, very much for raising that. Hopefully this just provides a little bit of distraction, right? Because obviously what really is important are the lives and safety of as many people they can get out there. And obviously just the biggest shout out as well to the heroes of the emergency services, anybody that's gone over there to volunteer, as well as all the local people doing everything they can. So yeah, blessings and prayers to everyone over there. So before I digress too much, everybody knows I love going off on a tangent. Just while I'm going back to this range style. So we just covered the inside bar range, right? Now, this is what I would call an impulse range, right? Now, this is where we see a clear move to the down or the upside. Price comes up, sets a clear high. And all we do is we take the range low from there, the range high from here. And whenever we get an interaction, so let me just draw this across. Whenever we get an interaction with a low or high, our premise is that if we fail to close, yeah, and establish ourselves outside of the range, so let me mark these in and I'll show you what I mean, then we expect price, when it comes back within the range and gives us confirmation on the lower time frames, to travel to the far side of the range via the EQ. All right. So let's very quickly just have a look at this before we move on so that you guys can see an example of how that looks. All right. And yeah, really nice sentiment there, Craig, as well. Wishes to all, as I'm sure everybody is as well. So let's take a quick look at this, right? So what have I done here? I've replayed us to here. Yeah, perfect. And now let's drop this. I'd imagine most people here are looking at kind of like a 15-minute time frame, something like that. I typically execute. That's my highest time frame to execute on. I'm normally executing on kind of a 5-minute or below, depending on what type of trading I'm doing. Most of which is intraday trading, right? So, looking to get those open and close within a day. Now, this is something that when I studied SZ, who was my really, really big obsession years and years ago, and still is today, I still think just arguably probably the best price action trader in the space. Although I have a hell of a lot of time for Trader Dank, as I'm sure you guys know as well. He is something else, that boy. But let's just take a look here, right? Let me just turn the kill zones off for a second. So a lot of people say, okay, we've come here and we've deviated the range. Now, what am I supposed to do to get into this, right? Or how do I know this isn't going to break down further? So something that I took the lesson from SZ back in the day, and I think is a really good way to teach. And I think Dank uses very similar techniques to this as well. So when we see this initial move out, right? For me, what I want to see is this retested. Yeah. Normally a bit of low time frame consolidation around here, right? And then what I'm looking for here is for price to do something like this, ideally run back inside, break structure again here, right? Let me just get rid of this circle. Now, what this is telling me that this doesn't is this shows me that when price has broken out from here, we send that initial impulse move through. Then I'm looking for the pullback, a small consolidation, and then I want to see bearish structure formed again. In which case, then I'm looking to short. From here, when we see a sweep of the highs, price closes back down, we get that impulse move through, showing us that the market's ready to move, right? Now, what we actually got, right, is the opposite. Price comes down here, immediately gets bought back up. Now, when we're doing this, we don't want to, we never want to ignore our wicks, right? The candles tell us a lot, yeah? So see the long downside wick here, right? This is what we look at in terms of absorption. You'd normally want to see a few more wicks than that, right? But when you see a sharp move down, long downside wick showing that buyers have stepped in, then price gets back within the range, yeah? Then you've got a couple of different plays from here, okay? So if we zoom out a little bit, we can see that from here, this is our target, right? This is what we're aiming for, the midline. So we want to set interim targets and say to ourselves, well, where is the obvious liquidity sat? Yeah. So think about that term to yourself. Where's the obvious liquidity sat? So we've got a lot of highs here. Yeah. As prices come down, it's left naked high here, 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 here. Now, to me, the real obvious liquidity is sat above here, but I need an inter-range target, right? Because if I'm wrong on this, what I want to do is I want to get into the trade and then I want to be able to get my stops flat quickly, because if price comes back and takes out my stops, I'll monitor it again, wait for key levels to be run, and then I'm happy to step back in, right? I'm not going to go the whole kind of hero thing and hold this for crazy amounts of time, because I'm an intraday trader, right? Meaning that I like my trades to be open and closed in a day. Apologies, just pouring some tea. Good bit of Yorkshire tea for anyone interested. So I open myself to a lot of choppy price action, right? So I want to get in and out. I let the winners run when they get past a certain level, but I'm always looking for inter-range targets. Now, for me, we've got this cluster of highs here, right? So I'd be looking at this and I'd be saying, okay, this level here, yeah, and actually probably the last down candle, the key move here, right? We're either looking for a breaker or an order block. So you see these up candles here that led to the move lower? That would be a key point for me, but I would also be looking to include these wicks up here. I basically want to create something like this that gives me an idea of where we might run into an issue, because quite simply, if we come into this like we do here, yeah, let me just grab this. So see, we come up and we make this high. Yeah, price comes up and it gets into here. Remember, like I said about a breakout, right? We've got this at the moment. If we're looking at this as a level, right? This is either a breakout or it's a deviation and we get back below. Okay. So as it turns out, set this higher. But if I was looking to trade this, when we get back in the range here, yeah, I'd be looking for a key structure break. Yeah. And then I take a Fibonacci from the height of the run, all right, down to the origin, right? So the origin is down here. Now, I label this up as PD, which is a term that I learned under ICT's original mentorship, right? Oh, I've got to stop saying right all the time. I'm making this into a proper habit. But what I'm looking at this as in terms of premium and discount, right, I would recommend you go and study ICT, guys, if you are interested in learning more about that. How I use this is I'm looking at the impulse move higher that breaks structure, and then I want to see price return into discount, yeah, for my longs. And what am I looking for those? I'm looking for a breaker, which I'll cover with you shortly, or I am looking for my fair value gap. So this is the fair value gap, the inefficiency in price, which we're drawing across to here. I'll make this grey, a bit darker actually, so you guys can see it. So this is our fair value gap. I like to see ideally it come to the equilibrium of this. So I just take the fib, top to the bottom. We can see the 50% here, and just making sure that it's in this area. Yeah. Now, if we don't come down into here, or I might take a partial entry when we come into this point here, but it has to be, the gap has to exist within discount, which is this red box, which is just 50% of a range from the top to the bottom of that impulse move. All right. So an entry would look like this. Then we go underneath here, right? So that's the origin of that impulse move. We don't want to see that violated. It would really help if I did it in a long position. So here's our stop. And we know that our first target is here. See, we didn't quite come into it here. Now, if we extend this down and we allow for that up move before the sell-off, then we might say, okay, we've had a rejection here, yeah? But we're back in the range, so we're expecting higher prices. As it turns out, we're rejected here. And at what stage are we rejected? At the 50%, right? Here. So it still allows us to get a 1.82 trade in. At that point, I'm taking some profits and then I'm moving my stops to entry, meaning it's risk-free. In this instance, we didn't make it above, we broke back down. However, if I've trimmed off here some profits, normally quite heavy for me, because I like to book good profits early. So this would be, I'd be looking to take probably 40 to 60% here, if not sometimes more, depending on how key I think this is and also our high time frame bias. But if I've taken the profit there, and then like we said, we've got our eye on that high, yeah? Now, if price comes back down here, takes out some lows, comes back in, breaks above here and retests this, then I'm happy to add there, knowing that my high probability target for my system's up here. So then you add to the position, you compound it as you move up. So I'm de-risking, but at the same time, I'm happy to step back into this. Why? Because I know I can run to at least there from here, yeah? So once we get above this, because that's the key liquidity there. When I'm looking for liquidity, I'm saying to myself, where's the obvious liquidity sitting? All right. So hopefully, guys, that gives you just a little kind of input on what I'm looking for here. Now, when we get rejected here, by the way, and we come back into this, then it's not time to panic. You just monitor it again, right? We're still running a low. Yeah, we're still running out of the range low. What happens here? We fail to take out this. We fail to build that bearish structure to the downside. What do we get? We get that impulse move back into the range here. If we were looking at it from this impulse move higher, we took it to the high to the low, get our 50% entry in here, stops under here, and then we're looking to trade it up to these highs, really. You know, we had this, something stopped the market there. And then as we look across, we come back down. Depending on how tight you've got your stop under here, you're taken out, right? Would you get your 1R? Would you get your target? Maybe not. I think this is a loss, this trade, if we're taking it from here. Stops under the origin here. And then obviously we'd be looking to target these highs here. So we'd come and get taken out. Not a problem. What we're then looking for is interactions with the range again, right? Now, because the trade doesn't necessarily work out, and this is the issue when you're trading on, you're taking a higher time frame bias and executing on a lower time frame, is then you're just looking for obvious points of confluence to say, okay, well, what's holding price here? So you see price comes up, something stopped price here, stopped it running these lows again, right? So it's almost certainly this consolidation, right? This consolidation here. So if we look at this consolidation here, that's what's finding support here, right? So you can say to yourself, okay, well, if I'm holding my bullish bias, because price is still within the range, we're just getting chopped up, right? If we just look at this consolidation here, what do we like about this? Well, a couple of things. I'd do this a little bit neater. I'd be looking to focus this. But if we were looking at it, you're looking more at the pullback here. So the high of this candle down to here, because this is the move down that led to the move up, right? Or if you were really nailing it in, you would say this is the move down that led to the structure break. So what I like about this, like with any order block, is when price moves up from this, you ideally want to see it retested before it moves. That gives you an idea that what was providing now support is still support and buyers are willing to step in. When we revisit this, as I do with any order block, we split this down into our 50 again, and we want to just see the 50 holding here. Yeah, so we get these key reactions here, here, and here. Now, this is when price tells you it's ready to move. Yeah, see this impulse move higher. This is buyers stepping in. Now, if we put our hats on, right, of institutions, of smart money, people that are looking to make the most of this market, they've targeted the clear liquidity up here, right? Now, we're back within the range. If you had a really large account and you wanted to go long with that, yeah, and you've said everyone started to break out here, so you've caused this move down, right? You're manipulating the market, for want of a better term, to push it and bend it to your will. Why? Because people like us have taken these trades thinking we're right, and now this move has wiped out our stop losses. In doing so, it's created a lot of buy orders, right? As in a lot of orders, a lot of sell orders, for buy orders to be filled. Because when our long here gets triggered out, this turns to a sell order. If you've got a big account that needs a lot of sell orders, this is where you want to fill it, right? So as we look at this across here, when we get that impulse move higher and price willing to move, we look for the retrace into here, yeah? So let me just get rid of this fib quickly. Oh, not that I can do that actually. I think, yeah, there we go. Right, so we've come into here, and again, right, we're just looking at this high to the low of the impulse move. Do we have our inefficiency here? We do. In discount, here's our entry, stops below the low, and then what we end up catching this time is a much nicer move higher. Right, now, we didn't reach the EQ. Yeah? So this is why it's always really, really important to look left. And what we're saying to ourselves is, okay, well, what could have stopped price here? And for me, there's something quite key in this block, right? So if I'm looking at order blocks, if I'm looking at consolidations, what I want to see is I want to see the origin of the breakdown, yeah? So I'm saying to myself here, okay, look, we've got this high, this up move here. If we mark this in, I'm catching this one to the bodies here that stop, then let's look at what this means. So price has come down, found resistance, come down, found resistance, come down, come back up again, attempted to get above it, resistance again. Look at how key this block is for resistance. So what does it do? Gives us opportunities to short if we're playing it within the vicinity of it. And then when we move it forward, it gives us a target, right, for our long trade. So we're in here, stops below the low, we get filled in here, we've got a nice 4 or 5R trade. Yep, we lost 1R here. We got, probably, what did I say? We took off that 40, 50% of that trade. So you can see as you go along, if it's respecting the range, we trade the range until the range fails. We get another example of it here. I won't draw it out for you. I'm not trying to teach you to suck eggs, just to kind of bring everyone aligned on what we're looking for when we draw these ranges, right? So has everybody got that? And is that all nice and clear? Just going to field a couple of questions. Fudalachi, David, hello mate, apologies about the pronunciation again. Can the deposit $100 to receive 1 month's calls only description be done multiple times, or is it just 1 month? No, if you go onto the Bybit link, mate, you can find it in the description. It explains it all there a little bit clearer. But basically what you can do is, as long as you're trading, you can keep doing it, you can keep depositing, and you can keep getting access to the calls. What I would say is that what's great about this and what we do as a team of professional traders is we're sharing our call setups every day, right? So although it's a call service, the whole point of it really is that it gives you the opportunity to build a little bit of bankroll if you want to follow those calls whilst using your time to learn, right? Now our mission as a company is to empower people with the skills and tools necessary to pursue their own financial freedom, right? We don't want people that are hooked to the official calls. It's nice because in these times, especially with inflation, with the cost of living rising, it's a really, really great way to just earn a little bit of extra money, right? But at the same time, really be focused on your own education. You get loads of access to free education material as well as other videos, all the other bits and pieces, and a really great community to ask questions. So do make sure you do that. If anybody else is interested in joining that, we've got a link in the description below. You can join up for free. There's a very low deposit limit, and you basically get access to our calls from the professional trading team. But like I say, the real idea of this is to earn while you learn, right? So really make sure you're freeing up the time to educate yourselves if this is something that you want to pursue, all right? Awesome. You're very welcome, David. Ken, my man, how are you doing? Crypto 101. Right, okay. Quick questions on the Fibonacci's. So for my premium and discount, which is I just want a Fibonacci that's basically set with a green box to 50% and then a red box to the bottom 50%, I just have the 0, the 0.5 and the 1, and then I just color them differently and then allow them to fill the background using that box there. If you turn that off, then you just get the lines, all right? Now, my BC fib is where I'm looking for my golden pocket, 0.5 as well, and the 705. So let me show you that in a bit more detail here. So let me show you that in a useful situation, shall we? So this impulse move up here, if you're not a fan of the premium discount type entry, and then something that I used to use a lot and still do, are the Fibonacci's. So taking this up from the low to the high of the impulse move, we'd be buyers, or I would be a buyer at the golden pocket. I wouldn't want to see price really starting to close much more below the kind of 50% of between the 705 and 1. Price can overrun this a little bit, especially in crypto, right? But then what we want to do is see this hold, and then that's how we get on board. Also, you can use this to compound on trades as you move up. Yeah, so this is our next leg up. So we snap to the bottom of that, take it to the high. Lo and behold, what do we get? Our golden pocket gets tagged, all right? Then we get our next impulse. Here's our correction. Our next impulse move comes to here. Price starts to correct back down. Take it from the low to the high. We get another golden pocket move in here as well, right? I absolutely love Fibonacci's, but let me just give you the settings for that. Actually, what I'd recommend rather than this one, I strip this one back a little bit, is the grey and gold one. Now, I know it's got more lines and levels on it, but when you're using a Fibonacci to test strength in a trend, it's quite handy to have the 236 and the 382 as well. And also the 786 here, as we'll see if I put this one on when I said about taking this original move, yeah, what you'll see here is that 786 is our last kind of bastion. It's our last support, all right? Not our last overall, but if we start closing below here, I'm starting to think, okay, maybe my trade idea is wrong, all right? And then, like we say, when you're measuring a trend for its strength, this one to this one, we can see we come to the 618, yeah? Then you can say to yourself, if you start tagging the levels higher up, then you can really, really, see that you've got a strong trend or a weaker trend if you see starting to lose it. Now, for the numbers, guys, if you're interested, you can take a screenshot of this or do just tag me on Twitter or in the Nest chat and I'll happily send you a screenshot myself. But I've got the 0, the 0.236, the 0.382, the 0.5, 0.618, and the 0.66. This is what makes the area that is the golden pocket, golden ratio, or the golden zone, you hear it called. Then we've got the 0.786 and the 1. All right. That's a really good fib setup, that is, guys. If you're doing that, give it a try. And the way I'd recommend doing it is just choose a time frame, right? And then let's just say this, for example. Let me just clean this up very quickly. Let's just take this when we break back into this range. Yeah. So wait for a market structure shift. So we've got our low, we've got our high, higher low. Where do we get our shift in market structure? Our break is here. Yeah. Because we've got our higher, higher low. This then makes the higher high. When this higher gets created, we've got an upside target, right? Let me draw it back in here. Right, obviously we're worried about this order block as well, which we've drawn in previously. But remember what I said, whenever we're in a range, we're most often within a range that's within another range, right? So we also want to be aware of where the equilibrium is, okay? So anytime price gets in and around there, that's what we want to be aware of, okay? Don't quite get there on this occasion. However, what we do know, again, is that on any impulse move that breaks market structure and gets retested, right, we're very interested in the order block, or I'm very interested in the order block, yeah? Because for me, I'm saying if we're going to show weakness here, then where's that going to be, right? So we can see as we come up here, we've got the 0.5 level between this high and this low that we've stepped back into. So what are we going to do? Here's our market structure, yeah? We've broken to the upside. We want to take our Fibonacci from the low to the high. And we can see here the price only gets to the 382. Now, remember what I said about using Fibonacci's to measure strength, right? Now, for me, I'm getting quite excited at that point because it's showing me that this trend is strong. Why? Because the deeper the retracement, yeah, if price can only get to the 382, you know this is going to be loaded full of orders, right? The golden pocket. Price can only get to the 382 or the 236. The higher up that it bounces and you get this impulse move away, the stronger the trend. Why does that excite me? Because then on this next impulse leg higher, we're still not at this target. If I can get a retracement here, and a bounce further up, I can play it into this order block. So here's the origin of this impulse move. So we want to use our magnet tool to snap onto the bottom of that. And then we want to draw it up. First of all, it would have been to this higher, and we would have seen again the 382. But then we set this higher, right? So we extend the Fibonacci up to that. Remember, that's before any of this price action's played out. We see the correction. We place our orders. I typically place them on the 618, right? And then my stop loss normally goes around here, right? Which is a weird thing to say. If I'm using a Fibonacci, you can either use the 50% between the 786 and the 1, but I typically put it just a little bit lower. Crypto can be a little bit illiquid and you get those little cheeky wicks that can grab you sometimes. So that's how I do it, but I would always recommend everybody check and test what it is that works for them, all right? But here's our impulse leg. We correct to here. Let's see how that would have looked as a trade, because we still have to make sure that the risk to reward is worth it, right? Now here, this is when we're tagged in our entry. And like I said, we're either putting our stops around about here, which is typically where I favour, a little bit off the bottom, but you could be conservative and put them just below this swing low down here, all right? Now, for me, I need at least a 1.5R, and I've got a 2. That's perfect, right? That's a lovely little move. I'm going to be closing heavily, taking profit, and then happy days, all right? Friends, I recommend... Oh, let's have a look at this. Some valuable insight from Crypto 101. Friends, I recommend Steve Nielsen's Japanese Candlesticks book. Trading View reminded me of that book. Awesome, man. Awesome. Yeah, I recommend everybody... What I would say is whatever you study, make sure that you test it to prove it for yourself. I read a lot of trading books over the years and taken some fantastic bits out of a lot of them. And in fact, a lot of the study that we've done, well, one of the key and probably most recognized is the CMT, for which Burb is a level 3, which is pretty much the highest that you can get. He's the only level 3 in Poland, just to put that in perspective. But it's the Chartered Market Technicians course, right? And it's very much that professional run on the ladder. If anybody's thinking about studying that, technical analysis of the financial markets as well is a very good book. But again, study, and I always recommend studying, but have two sides of you. Have the trader and the student, right? You want to build a system that you can test over a long period of time, make sure it's robust, and then you want to be executing that system on a regular basis. That's what's going to pay your bills. Then you have the other side of yourself that's the student, that's all about learning, all right? But what I would say is things like this seem really cool, and the mistake a lot of people make, and I've made it myself in the past, is going like, oh my God, that looks amazing. And then I just jump straight on the charts and start trying to trade it without the context behind it. And that's where it can get a little bit difficult. So let's smash on to the charts request, which is the second half of the show. Uriel, hey, buddy. Thank you very much. It's a lovely thing to say. Love having you guys on the stream. If you've got any questions on that, guys, do let me know. And let's maybe take some requests. Has anybody got anything that they are looking at? Has anybody got any charts that they'd like to see? And we're just going to rip through them and do a top down. We'll start on the high time frames, rip through to the lower time frames, see what it could have told us, obviously with the power of hindsight, and then see what it might tell us moving forward. So if not, then I can just pick one at random. I know this is a little bit more of a crypto crowd, so I will keep it crypto focused. Just pick one at random, shall we? Avax? Let's see what Avax is doing. Brilliant. Daniel, hey, buddy. You're very welcome. Very, very welcome indeed. Let me just... whatever stuff. Let's just see what were we scribbling along this before. Vert tests. See? So this is something you guys don't see me do very often. Not the verts. This is testing high time frame, price action theory combined with low time frame plus divergences. But this here, we can see how lovely and clean this was, right? Now, you don't see me use trend lines often, and that's because to use them, they really need context, because you can very much almost always just fit a trend line to suit your bias, right? Like, for example, we take that here to here, I try and respect 2 touch points, unless I've got more data. But all of a sudden, if we move that to here, or say here, it looks perfect, doesn't it? We're like, well, we tapped that perfectly. This was a deviation. Look, resistance, broke out, support, boom, to the moon. But before you had that, would you have picked that? Probably not, right? So I think sometimes it's one of those things. We got some requests coming in. Who have we got? Vickers. Thank you very much. It's very kind of you. Avax would be great. Perfect. Let's start on Avax. Renault would like H-bar. BNB got hit hard with Paxos news. How is it doing? Can it reclaim higher levels? Crypto 101. Love that. Okay, so we've got some beasts to start with, right? So let's just delete all of this. Right, start with a nice, clean, fresh chart. Don't know what this stuff is. Probably not overly important. And I like starting with a fresh chart. I feel it gives you a really fresh, clean outlook, right? Now, on other asset classes, FX, legacy, bits and pieces like that, and longer standing USD crypto charts, I would start with a yearly, right? But unfortunately with these, because look, so last year's high, 2021 high and low, right? So it doesn't really give us as much as we win. And then I would move on to a 3-month, right? Okay, again, we can see not really a lot of information. So the monthly can sometimes be as high as you can push these, right? Now, this level for me, I'm kind of saying to myself, all right, well, what's capping the market? Yeah. And there's something that stands out here for me. And I'm just going to run through this really, really quickly, right? So I'm going to put this level on here and I'm going to make this... let's make this purple, right? And this is our high time frame, our monthly mother bar, right? So everyone, I want you to remember for me, our purple is our monthly level. So why is this significant? Okay, and this would be significant as well because this is the inside bar, the other 50% of the inside bar pattern, right? And why is this important, right? Because when this candle forms and this candle closes with its high and low within the high and low of this previous candle, it becomes an inside bar pattern, all right? Now, the reason that these are really interesting is because we trade them like ranges. If we deviate the high, we expect price and comes back within, we target the low via the EQ, yeah? So to get the EQ, we just take our Fibonacci, right? I often just move it down to my standard, so it shows me my 50%, and then I'm just going to draw this in. Right, so here we have our range. Actually, that's not quite perfect, is it? One sec. There we go. So here we have our range, right? So when price deviated here, we expect price to come back within the range, travel to the far side of the range via the EQ. We do the same with our inside bar as well, but we pay more weight to our mother bar, all right? So that's really got my interest peaked here on the monthly, okay? The same as anytime we have naked highs, yeah, so find this high swept this one, but didn't take out this one here. Now, what you'll notice, especially on the high time frame levels, which I'll just draw in very quickly, is most of the time when we run a high time frame level, you get some kind of reaction from that, right? So notice this, sweep, swing fail, sells off. Sweep, comes back within, turns out to be a swing fail, sells up. Here, sweep, and that's why at the moment we're just getting this corrective move back down. Okay, so it's a really nice, simple way to look for and set ranges. And when I teach this, the inside bar pattern, something that's really good to just get your eye in with this is there's a free indicator available on TradingView. It's just called inside bar IND/alert. Yeah, that's inside bar IND, stand for indicator, and then /alert. And then if you put that on, it just highlights the inside bar for you. So you take the previous bar as your mother bar. Yeah. Then that way, when you're searching through price action, yeah, you can see your inside bars and mother bars. And again, when we look at this, here's the mother bar low. What happens? Price runs it, makes a break for the highs via the midline, gets rejected at the midline, and then we sell off. All right. Here's another inside bar, mother bar. The inside bar high gets run here. Yeah, price closes below. That's a terrible line. Hang on. Price comes back within the range, and then we sell off where to the range lows. All right. So really, really good thing to study, guys, because an inside bar pattern forms when price is typically consolidating or it's looking to make its next move. So this is what we've got on our monthly levels. Yeah. So now we're going to go to our weekly, where we get a bit more data, and we can see here how well these levels have been respected. All right, here's our deviation. Price comes back within. First of all, we get the 50 line, the EQ, retested beautifully. Then we get the sell-off, where to? We see the inside bar low, held price here, before it finally purged down here. Now, what we got down here was we swept these lows, right? Because what we would have done on the lower time frames in line with our system is when we had this breakout, like I said, we'd be looking for this area to be retested, which it does get. And then we'd actually be looking to trade this short from here into these lows, which on the low time frame would have probably worked out. Might not have done, but it would have been the thing that fits my system, so I have to trade it. But as soon as we get back within the range, yeah, then we're really, really certain or very, very positive about the fact it's going to reach the midline and then target the opposite side of the range. Now, is there anything else really clear and obvious for us here? Well, we're being held at the midline at the moment. We took out this key high here, which we can see price came in, reacted, closed underneath it, right? So that's a level that we want to be aware of. So we're going to just drag that along, and we're going to make sure we're aware of that as a key resistance level. Why? Because price rejected here, deviated, came back in, and now it's sold off. Now, is there anything else that we're looking at? Well, we want to look at our inefficiencies, right? Our fair value gaps. So when I'm looking at this, I'm saying, okay, well, what's drawing price higher is probably this, right? We take that as our fair value gap weekly. Now, I'm looking at this more as a draw on price, yeah, more of where price is getting pulled, yeah. So we've got to overcome this first. But then you look at this and you think, Christ, is there really much room to get a day trade in there? Like measure it, but you'll be surprised. Yeah, 8% between there and there. You can make an epic day trade on 1%, right? As long as you get your entry and your risk correct. So, is there anything else here that we want to be keenly aware of? I would say probably not. I would always have a look at my Fibonacci. We can see we're holding above the 50 line at the moment. Obviously, we would want to change this to our one here. So at the moment, the trend is showing strength, yeah, holding this 50 line. The more it shows strength here, the more we've got an opportunity to move up above. Crypto 101, evening stars. So candle patterns. This is what we're actually going to take a look at on the lower time frames. I am looking a lot more at shooting star candles. I'm looking at pin bars and engulfing candles, right? So on the higher time frames, and you can break this down onto the hourly as well, something to be aware of is when you see these key swing highs and lows and they break down, or in these cases they break up, then if you're looking for engulfing candles like this one, yeah, so I base it on the body. So the volume of this body has to completely engulf the volume of that, which it does quite easily. Then that breaks into our bearish bias, meaning that we look for this day to open, fill our orders, and then trade down. Then when we get a pin bar candle, which is this one, see it looks like a hammer, right? Which means the head is all at the top, and then you've got this long downside wick. That's also a bullish candle. If it was inverted, like this one, it's a bearish candle, yeah? So as we are here, we can see this bullish engulfing candle set this move off lovely, yeah? And this, although this was obviously a big down candle, we can see that we did get continuation to the downside, as we did after this shooting star or pin bar candle, and this one as well, although I'd want to see the tail a little bit longer. So if this week finishes and we've got this pin bar type candle as it is now, then it would factor into my bias that I'd be looking for higher prices, right? So now we've marked up our weekly, we're going to shift to our daily. Now we can really see how price is reacting. Yeah, we really get to see a lot more. Now, bearing in mind, these are daily candles, right? So this is a lot of information. This is going back to June last year, okay? But we can see how well respected these levels are. Now, remember what I said, or don't remember what I said, but just take it on board. And if it's something you find interesting, great. If it's not, let me know. But when I'm looking for a confirmation that a level's broken down, it's not just a deviation. This is what I want to see. I want to see this initial move down, retraced, yeah? And then I want to see this acting as support. And then I want to see on the lower time frame market structure, sweep, so come above and take out some liquidity, break structure, and then we trade it to the downside, all right? So when we get the opposite, when we get a deviation, what we notice here is this is the initial breakthrough, yeah? Price doesn't hold the line, comes back below it. Then price breaks through again, looks to hold the line, but loses it again. Retests it under the level, retests it here as resistance. That's when we get our favorable trade to the downside, okay? Now, anytime we get these thin, long moves that leave these gaps, these FVGs, same as this one here, we expect these to be filled over time for the market to rebalance and to become efficient, all right? And yeah, point here from Crypto 101 looks like a head and shoulders here. Not actually a pattern I trade massively myself, but yeah, I can see absolutely where you're coming from. This one here would have done as well, right? So you come up, set the shoulder, the head, the shoulder, and then you're looking for a breakdown of that, which you actually got here to then sell it off. But yeah, it's a really good point, especially if you're keen, like you said about CMT, then you cover pattern recognition quite a lot in that as well. So for now, where are we? What else can be giving us conviction here that price is coming up and not just coming down? Well, first of all, we're bearish on a daily scale here at the moment. Yeah, doesn't mean that we're not going to go up from here, but it does mean that we need to be aware of that. And what am I keenly aware of here on a daily scale is this, for me, which is kind of capping the market at the moment. So we came up high, here's our low, higher high, higher low, lower high, losing this low here, yeah? For me, I now want to see this level either rejected, in which case we trade it to the downside, targeting here, or for it to reclaim it and move higher. The other thing we want to be looking at in terms of what could be offering support here are our down close candles. Yeah, because like an order block, right? Your down close candle leads to this impulse move higher. So if we want to mark this in on a daily scale, then you want to see this hold as support if you're bullish on this. Yeah. Start breaking down here and retesting this, then I think this is when we're going to drop down a bit lower. Okay. In terms of that, then if we're going down to an hourly, looking at our kind of candle patterns again, so we can see what happened here, right? We can see we've got this key level. We can see price has broken down, made an attempt to get higher, and then it sold off. When we're on an executable time frame like this, the biggest question that comes in is where's our liquidity resting? Yeah. So where's the obvious liquidity here? So we remember we're looking left, right? So for me, I'm looking for consolidations, yeah. And the thing that really kind of piques my interest when we get these are looking at these type of moves. When price has come down, clearly taken out some lows, like these equal lows here. So we've swept those. And then what we want to see is we want to see price close above the high that's taken the low. Now, bear with me. I know this gives us a big range here, right? But you'd be amazed how often these breakout areas are respected, right? This becomes almost like a pseudo support range. Now, the other thing is when we then track this across to here, we can see we're in this point of consolidation here at the moment. Now, the only thing to say is that that's a very big point of consolidation, right? So we're losing a lot of trade opportunities if we're waiting for price to come up, bounce here and go up, or lose it and go lower. So we're aware that that's there and we play that into our thinking. But then I'm kind of saying to myself, all right, well, what kind of caused this move up here? Yeah. And looking left here, we can see we've got all of these down candles, right? All of these down close candles. So again, we've got a really big down move before price moved up. But if I look across to here, and I'm saying once we had this corrective move here, we kind of had these down candles here, and then price kind of found support. So if I'm looking at these, now I'm saying when price was here and it came up, found support again, came up, then it's purged below it. But it's done that to generate liquidity by taking out these lows. Then it's recovered very quickly, retested it, and found support. So again, all I'm saying to myself is what kind of interaction do we get with that here? We can see here where this is acting as support, yeah? We can see again it doing exactly the same. So the theory for me is this. If we're coming up here, now we've got local liquidity resting under here in the form of these relative equal lows, right? So we're going to mark that up. And if we're coming up, we see we get the retest, price comes up, finding momentum, pushing higher. There's going to be some stops above here. And we've obviously got this key level that we've drawn in from earlier. So if we want to be bullish on this, what do we want to see? So like I said, I would want to see a clean move above it, showing us, right, that the bulls are stepping in. I would just want to see price kind of hang around here a little bit. Ideally get some kind of purge lower, break of market structure to the upside. And then when we do that, our opportunity to enter comes in the regaining, almost forgot the word then, for the regaining of market structure. Yeah, so we've consolidated here a bit, run on liquidity, taken out the high, set the higher low, and then we're moving up. That would be how I'd be looking to play this. Obviously, we've got our 50 line here, yeah, our EQ, which is a key point, and then above that, we've got our next target here. And again, when we're asking ourselves, where's the key liquidity resting, then we know obviously we've got this. So remember what I said before about looking for those breakdown patterns. So there's the sweep of the high. Here's the low that swept the higher. When price breaks through that, retests it again, gives us a lovely short opportunity. Now, when we revisit this area, we would expect some kind of reaction here as well. Okay, so just key points of consolidation and breakdown are the key things. I keep saying key today for some reason. Are the main things that I'm looking for. But if we're going to break up here, I want to see a clean break up. I want to see this level held. Yeah, a little bit of consolidation before price pops, gets back into bullish market structure, and then we trade it to the upside. And I've managed to hit spacebar, which I seem to do with alarming regularity lately. Here we go. back to Avax. So the other thing, just the last thing I'd say, is when we're talking about candle patterns, which was really well brought up by Crypto 101, then looking for engulfing candles. Yeah. So this is a bullish engulfing candle. Notice how the whole body completely engulfs the prior body. Yeah. We get another one here. Right. These are really, really significant on all these, most of these moves. You get one here as well. We've had another one here. So a really good way to kind of play these type of systems is to kind of play the range until it doesn't work anymore, right? I would, however, be aware of this level. Just because we've got an inter-range clean high here, could have some stops above here, led to a big impulse move lower. What would I want to see hold here? I would probably favour these up candles here. And I would just want to see price kind of hold this. Yeah, treat this as support. If we lose this, however, this is how we would look to take the short play. We see a rejection at this level. I would prefer price to purge this as well, right, before coming back down. But we might not get that. If it does break down from here, what we're looking to do is same as before. You want to see that purge breakdown, that retest, yeah? And then you want to just wait for that market structure break. Then you're looking to get in on the retest of that. And then you're trading it down. We've got our order block down here. We've clearly got some liquidity here. But the ultimate for me is looking at those relative equal lows down there when we know that there's going to be some liquidity set. So that would be my current thinking on AVAX. We get above here. We look for a little consolidation and a pop. I think if we do get above there, by the way, I think we can see some fast moves up. A lot of inefficient moves on the way down here that haven't been completely refilled, or this one filled at all. So once we get above, this thing could fly. So we'd want to monitor it on the lower time frames. Let's take a very quick look at H-bar as well, was it? Renault, I believe, wanted to take a look at H-bar. Yes, let's do that. Here we go. Have we got any historical squiggles on this one, or is this one that I've actually remembered to clean? Oh, okay, a couple of little bits. Actually, very similar to what we've been discussing in terms of points of consolidation. These are just representative of fair value gaps or inefficiencies. Once again, like I said, even on this higher time frame, we can see price breaks out of this level, this, which was our range high at the time. We get that clean break, two lovely retests, this big, expensive, bullish pin bar. Remember, that's where the head is pretty much all the way up to the top, and then you get this long downside wick. Was a great trigger for us to go long, but we don't need that now. Let's get rid of all of that, and let's do our top down on this one as well, right? So this thing has just been getting pummeled, hasn't it? I mean, sold up, swing fail, and then just oblivion. But we can still learn a lot. But what I'm going to focus on here is recency, right? Because it's no good at us looking at things up there. We'd need such a big, big move. Now, what are we looking at? What could be capping price here? So first thing that my eye is drawn to is this order block here. Okay, so on a higher time, obviously we're on a weekly here, so let me move that back a little bit. Otherwise, when we go on the lower time frames, this will be out of shot by a mile. Once again, we got a nice clean sweep of the lows. We look at the swing high, which is this here, because it's got a lower high to the right and left of it. And once again, we get that clean break above, lovely retest, and price expands higher. So on a weekly scale, that's the main thing here. I'm feeling that price can get drawn higher into these inefficiencies. Yeah, and that's what we're looking at. Yes, well done, Crypto 101. We'll finish up with a look on BNB as well, okay? So, actually, what I forgot was the monthly. Monthly is just going to be looking a bit grim here. Although something that's bullish here, right, is when we look at what was capping the market before, yeah, support, lose that, sell off, price breaks back above this, and then has a nice expansion higher. So that would have been a key point to watch. We also have this huge monthly inefficiency up here, right? So monthly and weekly have been taken care of. Now we want to dip down to the daily. Now, again, when we're setting our bias on the higher time frame, and we've got this range, we've got this level. Now, I know this is trading a daily chart, right, which is hardly a lower time frame, but we've set this on a monthly and a weekly. What we do in terms of refining the ideas is we're saying, look, if we take a sweep, so this is our weekly sweep, right, and then we come in here, and here's our daily. Here's the high that takes the low. And again, almost identical. Do you see this? Like the previous one we looked at. Get that hold above here with a little bit of indecisive doji candle, price going both ways a bit. Then we get our beautiful pin bar, high time frame pin bar. In here, we can then drill into the low time frames and look for opportunities. All right. Now we want to take a 50 of this as well. This has become our trading range, right? So let's take that. And again, look how well respected these 50 lines are, right? Resistance, resistance, close above, retest, boom. Huge pop to the upside, all right? Now, what does that do for where we are in terms of recency? So what do I want to see hold? I would want to see this hold, right? These blocks here. Now, if I've got two small blocks together, yeah, then I'll combine them to form the main order block. You could also include this because it's the whole run up because they're consecutive candles, right? And in fact, if you did include this, and I typically look for the body as well, you can see that if we just extend this down to that, you can see what a key role it had to play here when price came in, initial rejection. Now we've popped through it. We've come to the 50% of this, which we can see here. Found support, literally almost to the dollar, right? Just make sure that's spot on. So I'm not conning anyone. Right? Impulse move higher. You don't jump in on these. You wait for the retrace into the inefficiency. And now we've got this move, which is making me feel definitely bullish, right? Bullish structure. We flipped this key level here, right? Why? Because it was the up move that led to price selling off. Would have liked to have seen this retest it, but nothing's perfect. Now we've come up, found our resistance here, flipping this. We now know we've got this in here as well. So once we flip this, got above here, we can see that actually we've got pretty clear sky above us. We've got these highs here that I'd maybe be taking a look at, or certainly this up move before the sell-off. But then I think this thing could really pop. Do I think we've got the overall economic conditions for it? It doesn't strike me that we do, but I've been wrong before, and I was wrong on the recent run as well. I didn't think economically it really stood a great shout for risk assets, but that's why we don't hold our bias, right? We trade what the charts tell us. We have an idea going in, but that's when we stop. So H bar, and then we're going to finish up on B&B, guys, all right? So let's just get rid of that. We can see what happened there. Or actually, let's not, because I'll show you just very quickly when we drop this down. We're now going to go on to our hourly. Right? Now, we know that this is capping price here, right? Trying to get above it. Same thing here. It cannot do it. Now, when price pops, again, we don't jump in here, right? This is the initial move above. We want to see a retest and a reclaim of market structure. Yeah? Always the same. Doesn't matter what time frame we put that on. We always want that to be the same. So here's our low, high, lower low. Here's our shift of market structure here. Yeah, so I'll just draw that in, make that a bit thicker so you guys can see it. So what have we got here? We've got the impulse move up. So what do? Let's just stick with our fibs for this one. Yeah, we want to take the origin of the move. Yeah, so it depends what you're looking to do. If you're looking to trade from the origin of this up to here, in which case you can see it doesn't come down to the fib. If you were dropping this onto a lower time frame, you'd probably be drawing your fib from this low here, in which case you'd be looking for it to go to the golden pocket, which you can see strikes in here. Now, if you weren't looking at that for an entry and you were looking to stay on the hourly, then what I would say is I'd be waiting for this move to break structure here. This bullish engulfing candle would give you an entry. Your stops would have to be under here. So you need to make sure the risk to reward is there. What I would definitely look to do here, guys, I would look to move this down to a lower time frame. I'd be looking for an inefficiency. I'd be taking the high of the move down to the origin, which is here, in our premium discount. Here's our fair value gap. All right. That's what we want to see respected. That's where our entries go on the top level of that. And again, our stops go under here, exactly like the previous trades that we did. All right. So where does that leave us now? Well, we're kind of just a little bit in no man's land here. I think we're going to expand up and rake and run on these highs. I would be looking at these for a potential rejection because we've got the order block there, but we also have these, right, which are our relative equal highs. We start coming up and running into these. I think we can see a lot of liquidity up there, right? And if we've got liquidity up here, we could see a rejection. Now, if we get above this, again, what we want to see is an impulse move above it. Then we want to see that retest. We want to see price get comfortable here, bullish market structure, and then we can look to enter. All right. So that's what I'd be looking for H bar. Alternately, or alternatively, if we run these highs here, right? What a terrible line that was. We'll just extend this one across instead. Right? If we run these highs instead, and then price starts to break down, we'd be looking for the opposite, right? So we'd be looking for price to run up into these, yeah, come back down, something like this. You would want to see the breakdown of that. You want to lose market structure, and then we'd be looking for a retest of this low. All right, so you want to set that initial low. There's the break. That's the low that you take the break of structure. We look for a retrace either to our premium discount as we do here, or we use our Fibonacci's to find the entries. Okay, so that there, guys, is what I'd be looking at H bar. And then before I keep you here all night, let's take a look at BNB. Oh, brilliant. I actually remember to clear these charts off. No, I didn't. Completely lying. Loads of stuff on this one. Right, let's have a look. There's not too much. Ping these in a group and get rid of them. Perfect. So, monthly. So here we are on the monthly. What's the monthly telling us? I know we're not really there at the moment, but that's my key level there. Why? Capped the market there. Deviation, closed in, and then price sold up, right? We then come back down to this region. We've only found support here. We failed to close below it. So keeping in timing with that, that's our purple lines, isn't it? So here's our purple line. In terms of what's capping price to the upside, it's this. Right? Why? Because price came up to here. That's capped the market there. Resistance, resistance, deviation, price sells down lower. And now we're finding resistance here again. Obviously, what we can also do is we can draw in our range based on these and give ourselves a midline. Right, so that's where we are on the monthly. We now take a look at this on the weekly. Make sure we're happy with that. We can see here what a part this has had to play, finding support and resistance around this midline before it sells up, loses it, deviates, sells down to the lows. We can see what happened here. We've been rejected at the highs again after a very, very small deviation. And now price is coming down to search out liquidity lower, which on this time frame especially, we'd be looking for that to be found around here. We would also be taking our fib. We can see this 50% of this, and this is why I always recommend you guys to study this. You know, I'm not telling you how to use your fibs. You need to decide if you're taking it from the origin of the move or if you're taking the entire leg. But if we were to look at it here on this impulse leg up, we can see that our midline falls pretty perfectly with the golden pocket of the Fibonacci. All right. So again, we're building a picture here, building a story, and that looks at confluence. All right. What else are we intrigued by here? Well, we've got a very small fair value gap here that could be drawing price lower, and we've also got this one here. But as it stands, we've come and set a high, the low. We've now set a higher high. If we can hold this area here, again, a breakout above this range, I think first target here, next target, this order block up here that saw the sell-off in price. So let's drop ourselves to a daily chart and say what we're looking at here. Again, we get a bit more information here on the range. We can see resistance turn to support, 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 deviation, price goes up and under, comes above, finds support here, deviation has the big setup. So while that's choppy, you can see almost like when using a point of control how it's kind of this magnet for price when it has those moments of indecision. Now, what have we done? Well, we've run the highs here. On a daily scale, I'd be saying, well, we've run the highs. Here's our liquidity sweep. We've taken out the low down here that led to this sweep of the high. Look at that almost perfect retest of that there. Price has then been drawn back up into this inefficiency, this fair value gap, and it's continued to break down further. So now what I'd be looking at, I'd be saying, well, is there anything to the left here supporting price here? It hasn't run this low. Is it finding support off of this order block? Possibly. So we take a look at this and say, okay, well, maybe this. This is just a personal thing for me, by the way. I take order blocks based on the bodies. Now, a lot of people, including real absolute legends like SC and Dank, who are like I said before, probably the two best range traders I know of, are use the whole candles. So again, it's all about how you study, how you kind of back test, right? Because you need to make sure that you are aware, and that you're doing it consistently. Let me just make that a bit lighter. There we go. And then if we take our equilibrium of this, like we've done with the others, we can see here that price is respecting this 50 line. So maybe it's finding a little bit of strength here in this order block. Now, the good thing is here, we've got the range EQ, right? But we've still got a fair way down to go. If we lose this level and we go down onto the lower time frames again, notice how areas like this give us really, really good confluence, because look, the importance of this is when we set this order, but look how price has just found consistent support here, enough so that it's built the momentum to take a run at the range high. Now, as we've kind of come down and pretty much carved through that, price has recovered the 50 line, and is now recovering here. For me to want to trade this with a move higher, I know I sound like a broken record, but I want to see this move up and down. I want to see it hold, not take out those lows. And then I just want to see price come up, do something like this, right? And then get into structure where it gives us a trade opportunity to get in. I'd then be looking at that order block there as kind of target one. And then ultimately, we've got this here, which we drew in earlier as target number two. On the reverse of that, if we come down here and we start losing the 50 line, then I'd want to see something like this, a little purge higher, an impulse move lower, because this is what would give me the confidence. I'd want a tight stop in above here, because I've got an initial first target that's quite close by down there. All right. Burned. Yes, absolutely. Do you know what? SC posted something about this guy recently. Now, I don't really know a lot about him, but I think he's a Dutch guy, which adds to this just unbelievable collection of Dutch traders that are just absolutely insane. I've got no affiliate with this guy. Thanks for sharing the link. But this guy does what I would call an impulse range. He does impulse ranges insanely well, which is where you see a drop in price, a clear high formed, right? And then from there, that's how you develop your range. So let me just show you that very quickly, because it's a technique that I use as well. Let's have a very quick look. I know one of these. I think it's on here, actually. Parallel channel. Let's just use one of those. So we've got... Hang on, I've got to share this first. It ain't much if it ain't Dutch. I love that. Man, probably my favourite country. A lot of favourite countries, but in terms of people, I have lots of good friends. I maybe go over there 3, 4, 5 times a year sometimes, and could literally live off of bitter balls. So while we've got this here, let me just pop this back up so you guys can follow this guy as well and give him a shout out. Say BC says hi. I've not really engaged with the guy before, but be cool to have a chat with him, because I think he seems like a really solid guy. So the premise of an impulse range is we get the impulse up to here. So we mark the clean high, right? Draw that across to here, and then we simply take it down to the low, which is here. Now, how do we know when it's the low? Well, we want to see it cross back past the 50 line, and then basically what we're looking to do is we're looking to trade every deviation. So we want to trade that down to the 50, we'd want to trade that to the 50 and then to the lows, and then we deviate here again. Once again, we look to trade that to the lows until we get, look at this as well, just beautiful. We get that breakout, that long rounded retest into here. And what did I say to you before? You wait for that retest after this initial impulse move, right? And then you come into here, drop down, break structure, and then you can play that out with a lot more confidence, all right? But definitely trade this. That I believe that is his Twitter handle. Seems like a really, really solid guy, to be honest. And like I say, no affiliation with him, not part of our trading team whatsoever, but it's all about recommending good people. Go check him out. Go check out Razoon as well, just an unbelievable trader who is part of our crew. Bast, Trading Tank, another just cracking trader. Julian, King Julian, and Milky, the guys from the FA team. Also Trader SZ and Trader Dank as well. Those guys are just amazing. If you've got any doubts for the people, just pop onto my Twitter. I'll share my Twitter here, BT_Richfield, and you'll find them all under my connections. All right, guys. Surround yourself with very good people. That would be a real kind of thing that I would recommend to everyone while we kind of close this up. Now, I know we've run a little bit longer. I do try and waffle on less, but I do hope it's been informative for you guys. We'll be back next Wednesday doing another alt or FX request show as well. So do let me know if it's in for that. Going to be live tomorrow again with the legend Jimmy, your NLP coach. And we are going to be looking at the trading review for the statistics, for the weekly charts, for the weekly trades that we've taken. Just a new thing we're doing, completely open and transparent. All of our trades, all of our statistics are shared openly amongst the group, but also as well on Twitter, so you can come and check us out. Thank you very much to the handful of hardcore superstars of you that stayed along. No offense to you, those of you that had to leave. I know I do waffle on, but honestly, it's a huge... I take huge appreciation for it. I think you guys are great for coming along and listening to this. If you've ever got any questions, guys, do reach out to me. Look, you can find a free trial to the Nest, or you can come and trade with us at Bybit as well, and you can get all of our calls for free. Ref link is down there. The free trial link is down there. Anything that isn't, just come and shout at me on Twitter, and I will hook you up. So Renault, Craig, Michael, let me see if I can get through everyone. Crypto 101, Burn, Nemesis. Who else do we have on the stream today as well? Vickers, Daniel. Oh, I didn't see you sneak in there, Daniel, actually. Thank you very much. It's very kind of you. Ciron, my man, Uriel, Fadalusha David, who I'm sure I've murdered that again, but thank you so much, buddy. And Mr. Brownbug as well. We had you in earlier as well, didn't we? And Kasaba, again, another name I'm probably mentioning, and a huge apology if I have forgotten anyone that tucked in the early days. CS Lychee, that was the other one as well. Have a fantastic week, guys. If you've got any questions, don't hesitate to reach out. Wishing you all the best, and I'll be back with you all on Monday. Take care.